Welcome back to Market on Close. A little less than 10 minutes for us to finish this ugly session. Joining me, Sonders, Chief Investment Strategist, and Mike Townsend, Managing Director of Legislative and Regulatory Affairs from our Schwab team. Great to have you guys both here. We got a lot to get through. Major sell-off, Lizanne, and it seems kind of convenient, at least, that it's very earnings-centric, right? This isn't like the last year and a half of like inflation scare and stuff.
Yeah, so I mean, the rotation that kicked off with the benign CPI report, that was more of a macro story. But yeah, I think today you could point to the couple of high-profile earnings announcements, Tesla and Google. And I think with the Google announcement, what may be in focus right now is not so much that the bloom is coming off the AI rose, but there's been so much focus on how AI represents the revenue side of the equation with some of these mega cap names. And I think what Google brought into the mix is there's an expense side too with what they announced with regard to CapEx. So I think that may be a shift that's happening in the psyche of this is not just about the revenue generation, but the expense side as companies have to spend a heck of a lot of money to invest in AI.
You've got way more granular insight on earnings than I do in your team, Lizanne, but it seems like the simple way to think about earnings generally is that these tech companies are the ones that are going to offer the best earnings in general. Am I wrong on that? So if these aren't working out.
Well, yes, they are, except that we're going to experience convergence in terms of. So 2 quarters ago, it was about a 60 percentage point spread between the earnings bottom line growth of the Magnificent Seven and the rest of the market, the other 493. By the third quarter this year, maybe latest fourth quarter, it's expected that those two come close to convergence, where the Magnificent Seven, you're down into the mid-teens kind of forward growth estimates for the third and fourth quarter, and you play a catch up to about 13% for the rest of the market. So I think it's that forward convergence that's in play here in terms of the rotation as well.
Okay, and I love that stat. It's similar. I had a chart at the top from Dave Mazza at Roundhill showing the margin contraction that's now happening after a bunch of margin expansion, kind of equalizing with the rest of the index. So we also have lots to process policy-wise, Mike. Since we last spoke, we've now got, it seems, indication of who's going to be our Democratic candidate before the actual convention.
Yeah, it certainly looks that way. Kamala Harris, I'm really impressed with how fast the Democrats consolidated behind Harris. There's been a huge surge of enthusiasm. She has way more delegates than she will need. It's still not official until the delegates cast their ballots, which is probably going to happen by an electronic vote ahead of the convention. But there's a ton of enthusiasm, and the initial polls are, calling this a much tighter race. A couple of polls even have her ahead by a point or two, but all the polls seem to have tightened. I would say, let's wait a couple of weeks and see how the polls shake out, because I do think there's a honeymoon period going on here. There's a ton of interest and energy around her. But it might take a couple of weeks for the polls to sort of settle down, and we'll really have a good sense of where the race is.
Okay. Is there any possibility in your mind, Mike, has any of this market volatility been related to any of those surprises at all? Some had been arguing part of that rotation was a Trump bet, but it was always kind of a shaky argument.
Yeah, I think it's kind of a shaky argument. Look, I think there's no question that, there's been a change in the tenor of the race here, and that it's going to be tighter. It's more uncertain, and markets, react to uncertainty, no question. And I do think to the degree that there was or is a Trump trade, where some traders, investors were looking at a Trump win and what that meant for stocks that might benefit from a world of lower taxes and lighter regulation and higher tariffs and other policy possible initiatives. Maybe that's unwinding a little bit, and there's just more uncertainty out there. But I 100% agree that I think the market is reacting to earnings, it's reacting to economic data, it's reacting to the Fed and what the Fed might do, not really the election at all.
Okay. Lizanne, on that subject, it seems like what we just heard from Mike, what you talked about earnings, it's hard to argue that this is like a policy event, right? This was at first an inflation-driven macro event. Now it's a tech earnings event.
It is. I don't think this has much to do with what has happened with polls and the shift in the candidates. Maybe I'm just a skeptic on that note, but I think it had much more to do with the benign inflation report. And that triggered this rotation. You saw the sort of cementing of expectations around a September cut that gave a fillip to the down cap spectrum, where you were talking about more indebted companies and smaller companies have more variable rate debt. And that was the fundamental story. I do think now, though, that what's happening in the small cap space is a message around you need to stay up in quality. And this goes longer than just the past month, but over the past year, Russell 2000 is now up 14%, courtesy of the last couple of weeks. Profitable Russell 2000 stocks are up 20%. Non-profitable Russell 2000 stocks are up only 2%. So that's an 18 percentage point difference. So
Wow.
probably continues to make sense to look for opportunities outside of the mega cap names. You just definitely want to stay up in quality.
Hey, Lizanne, real quick, love that stat. Slight policy question, though, is the sell-off going to bring talk about maybe like a July cut, like if it gets super hairy? Because there was an op-ed by Bill Dudley today, kind of arguing for a cut in July. Just real quick.
He was arguing for a cut, not on the basis of market volatility, but on the basis of weakness in the economy. And I think there is still, I guess, a Fed put as it relates to the economic data. I don't think it's supportive yet of doing an about face and cutting in July. I don't think there's a Fed put anymore specific to equity market volatility. If anything, it helps on the financial conditions side, tightening financial conditions in the interest of continuing to see disinflation. So I think, and I don't think they're going to telegraph, and our colleague Kathy Jones doesn't think they're going to telegraph next week either. The telegraphing probably doesn't come until Jackson Hole. That said, Powell's going to be peppered with questions, and we might infer that that's what they're leaning toward, which is a September start to cuts.
Let's get weird real quick, though. Mike, what if Powell did do something in July, a shocker? Is that like career suicide for him if Trump gets elected?
Yeah, I keep telling people and remind everybody, his term doesn't end until May of 2026.
But they could yank him in theory, right? Isn't there like some way they could?
Yanking him would be complicated, to say the least.
Okay. Good stuff, guys. Great conversation. Mike Townsend and Lizanne Sonders.